Good morning everyone. My name is Ram Dhameja. Welcome to my channel. Today is 5th of July and it's been a decent week for our markets. There has been one news that has been catching everyone's attention, which is the ban imposed by SEBI on trading by Jane Street and company. And basically, if you ask me, it's a very good order. It's an excellent order because no one should have the no one should have an intent of gaming the markets, and that is exactly what big firms and institutions, especially the ones that are outside this country, have been doing. And they have been doing this by the sheer muscle power and money power, and with the kind of systems that they have, the high frequency trading systems that they have. But more importantly than that, it's sheer money power that is being used over there. The kind of access to capital that these firms have is at a very discounted rate, because the difference between India and US rates is very large. And these firms, of course, are all based out of different countries, and their access to capital is almost it's like unlimited. And by using that sheer force, what they are trying to do is they are trying to manipulate the prices in Indian derivatives market, and it has been going on for a long time. So it is good actually that the regulator has taken note of it. It is very good. It was long overdue, I guess, because this kind of activity has been happening for a very long time, and especially it has been happening on expiry days. And who is the person who loses on this? It's the retail trader who loses. It's the small prop desks who lose. It's the people who are trying to make an honest living out of this market who lose. And the modus operandi of these guys is very clear. What they do is they will take counter positions between cash and futures market, between futures and options market, and they will basically work on the spikes that options generate because of the time duration left in the expiry. So we have all seen how suddenly the option prices will jump from 50 paisa to 100 rupees within a matter of seconds, and then from 100 it will again come down to zero. And it is all if you have the money power, you can manipulate it via the futures. You can manipulate it by stocks. You just have to have enough capital to move the underlying. So in this particular case, Bank Nifty is the one that was being manipulated. And the way it was being done is that you create huge orders in futures, you tank the market, you buy put options which were out of the money and very cheaply priced, and you take the price 10x, 20x, 50x, and you book your profits over there immediately, and then take the reverse trade so that the market comes back, and in the process you end up making huge amounts of money. So it's a good decision. I'll take you through what the order is and what the implications of that are, but that has been my thoughts. Coming back to the markets, a lot of things, action happening in the markets. I'll take you through that as well, and I'll take you through what the Nifty levels are implying, and where are we, which sectors have done well in today's video. One small request: if you're not subscribed to this channel, please do subscribe to it. It gives me a lot of motivation, and you will also get the notification as and when I put out a video. And second thing is that if anyone is interested in building their mutual fund portfolio, I am a registered mutual fund distributor as well. So I help people make very solid, robust, good mutual fund portfolio. So if you need help in analyzing your mutual fund portfolio which is existing, or need help in building a new mutual fund portfolio free of cost, please contact me through the Google form in the description below. So let's start today's video, and let us start with Nifty. So this is the Nifty chart. This is the Nifty daily chart. So as you can see, we are at 25,400 odd, 430-40 odd. So we have taken some breather from 25,650 odd, and it's been 1, 2, 3, 4, 5 the fifth day. So it's a good consolidation that is happening. The support is at 25,250. So till the time we don't break this, there's nothing to worry, absolutely nothing to worry. So typically we might consolidate here for some more days and then take a sharp up move up. That is the most logical thing that looks like, because as you can see, we have been constantly making higher highs, higher lows, and we have not been faced by geopolitical news. This is the India-Pakistan war day low. This is the Iran-Israel conflict day low. So you can see even the lows that have been created in spite of a lot of bad news have not been able to break this uptrend which started in the month of from 7th of April, and we are now almost touching all-time high, pretty close to that. This is the Bank Nifty chart, much more stronger than the Nifty. So Bank Nifty is, as I had said earlier, made a lot of all-time highs already. So 9th of June it made an all-time high. After that, 26th of June it made an all-time high. Then 1st of July it made an all-time high, and now it's consolidating. So 57,500, 600 odd is the all-time high now, and the support is going to come at about 56,000. So it's just a matter of time before the leading sector of this particular bull run again makes a new all-time high. It's very clear financials have been leading this particular leg of the bull run. Now let us see how the indices are placed from their all-time high numbers. So Nifty, Nifty Bank and Private Bank and Fin Nifty have already made their all-time high. Midcap has also made its all-time high. Infrastructure is at minus 2.78 from the all-time high, which is good. And Nifty 50 is about 3%. So this 3% is going to get taken out in one good news. In 2 days, I think it can go whenever the market resumes its uptrend. Small cap has recovered all of its losses. It had lost about 30% in this particular fall, which started from September. It's just 5% away. And Nifty next is minus 12%. So this is some catching up to do. Similarly, the consumption sectors like auto and FMCG are slightly soft. They are at 13 and 17, so they have some catch up to play. And IT was about minus 20% a couple of weeks back. Now it's also gone up to minus 15%. So let's see how it plays out. Alpha is at minus 15.6 and momentum is at minus 18.6 again. Momentum is the weakest of all the sectors primarily because there's no momentum right now in the market. The momentum will start once the market takes out its all-time high. Now let us look at what the open interest is indicating. Open interest was slightly soft last week also, and that's why we have been seeing this consolidation, slight falls during the day. Open interest continues to be slightly soft at 0.76, but it's much better than 0.66 which was there yesterday. So it is much better than that, and we should be this 3 crore difference between call and put can get covered anytime, so it's not a big worry. In terms of the straddle premiums, yesterday was a good decay day, and we kind of started at about 300 odd levels and we decayed by about 30 odd points. So it was a good realization yesterday, because the Nifty expiry was very, very tough. It was very, very tough to make any money out of by option selling, but yesterday was good and a lot of realization has come in terms of the option premium. Now this is an interesting chart that I would like to draw your attention. This is from Value Research Online. This basically shows how the various categories of mutual funds have performed over the last 1 year. Basically, they are a representation of the sector as well. So if you look at it, what have been the worst performing ones? We'll start from that. So PSU, MNC, and infrastructure have been the worst performing ones. Part of that reason is that their rally had actually happened last year, so they have just been in consolidation correction phase. So they have been down by anywhere between -3 to -5%. This is for the last 1 year return, but if you look at the last 3 months, they have been doing all right. They have been up by 12, 13, and 15%. Now let us look at the sectors which have been flat. Large and mid cap, energy, value, small cap, etc. have all been flat over the last 1 year. Now let us look at the sectors that have done well. International has done well. So international, most of the gains have come in the last 1 month. You can see that it's up by 16% in the last 1 month, last 1 to 3 months I would say. And pharma has done very well, pharma and banking. So these three, you can see, have been the leaders of this particular bull run in the last 1 year. Then the technology, ESG, multi-cap, thematic consumption, etc. have all been performing just at par. So they have been anywhere between 0 to about 6% gains. Now, is there any change that has happened in the last 1 month? Let us look at the last 1 month return. So technology is kind of done well in the last 1 month. Pharma has done well and international has done well. So these three have done really well. And the sectors that have not performed in the last 1 month are PSU, MNC and consumption. So consumption, there is something which is majorly wrong with it. And I think, consumption, it's also a factor of the multiples that have been there in consumption. So especially names like staples, FMCG, etc. were quoting at 60, 80, 90 kind of P. Now they are getting corrected. Now they're coming to more sensible valuations of 30, 40, 50 P. So, that is got something to do with the kind of returns that you're going to foresee. Now let us look at the 5-year picture. So technology continues to be the best performer. So this, mind you, this will be from the COVID lows. Small cap at 33. Percent is the best, is one of the best performers. PSUs, infrastructure, mid cap, all have done very well. All of them have given bit over 25% return. The sectors that haven't done well is international. So international is kind of catching up. MNC, ESG, and large cap has given 20%. So this is from the COVID, but let us look at the 10-year number. So 10-year, the best performing has been tech at 17%, followed by small cap at 17% and mid cap at 16%. So you can see how various sectors perform, and that is where I say that for a retail investor it is very important to have a very good, well balanced mutual fund portfolio, which basically takes into account various sectors, how sectors are behaving, what is the kind of returns, because as you have seen over the long term, your returns will come at anywhere between 12 to 17-18% in the long term, because the markets have been going up by that number. So it becomes very, very important how you construct your mutual fund portfolios. You don't want to be underperforming the market while you are investing in mutual funds. So that is where the help of a advisor, a hand holder comes in. And as I had said before, that is where I help people make their mutual fund portfolios in a very robust way, in which we try to construct a portfolio in such a way that your risk is minimized and your gains, we try to maximize them. So please fill up the form and I'll get in touch with you for that mutual fund portfolio construction. So this was the returns. I thought I'll share this. This is an interesting one. This is for the debt. This is another interesting thing. So let us look at 1-year debt, or how have been the performance. So credit risk, of course, is given 11%. Gilt with 10-year constant duration is given 10.82. Gilt medium duration 9.5, and corporate bonds 9.4. This is all because the interest rates have been going down. And so if you are doing sensible debt investments, also you can make a decent amount of money which will beat your FD return. So again, it comes down to whether you are confident enough in, or you have the knowledge or the time to look at all these things in terms of the mutual fund investments. And if you don't, you should definitely consult an advisor. Now, that was about the Indian markets. Now, let us come to the US markets, international markets, and see how things have been. So, US 10-year has gone up a bit to 4.86. US 30-year has gone up to 4.86. And US 10-year is at 4.32, all okay. S&P VIX at 17 is all okay. NASDAQ was, I think, closed yesterday, or 4th of July, so it is closed. And it's been in a range. In fact, NASDAQ has been making all-time high. So if you look at this is the NASDAQ chart. NASDAQ has made an all-time high, and look at the jump that is there from 7th, 8th of April to here. It's almost gone up by 30-40% during this time. So that is where it becomes important to catch these bottoms and try and invest when the markets are down. US dollar index is at 97, which is fine. Brent oil is at 68, fine. Silver is at 37, it's making a breakout, and gold is at 33, 36, which is absolutely fine. Now let's come to the SEBI order, which is the Jane Street thing that I had talked about. So this is the interim order in the matter of index manipulation by Jane Street Group. This is the timeline of the order that has happened. In April 24, SEBI carried out an analysis based on media reports. In July, NSE was asked to examine the trading activity. In August, SEBI interacted with Jane Street Group. In October, SEBI issued a circular announcing series of policy steps in order to address what was seen as overtrading in index options. November 13th, NSE examination report on JS Group's trading activity. December, SEBI observed what appeared to be abnormally high or low volatility on the weekly index option expiry days. So this was noted. And in February, team of officials noted that prima facie Jane Street Group appeared to be engaged in activities in violation of SEBI regulations. And in May, in disregard of the caution letter from the exchange issued in February, Jane Street Group own commitments to the exchange was observed to continue run very large cash equivalent positions in index options, and now we know that they have been barred from trading, which I think is an excellent step by the regulators. It's very good. So this was the timeline, and you saw how big trading firms have been manipulating the small retailers and making abnormally high profits, taking the money out of the country. It doesn't serve anyone's purpose in that. And no one will mind if you are doing it through skill and you are doing it through strategies. If you're doing it through brute force of money and manipulating, and it's not good. No one is going to like that, and no country should allow this kind of thing to happen. So it's good that this has happened, and hopefully the others who have been engaging in this kind of stuff will also stop doing this. So that's it from me now today in today's video, and the market looks fine for next week. The big trigger for next week is going to be the India-US trade deal. If that happens, then that is going to have a good impact. So let us see how things unfold, and I shall keep you updated about the developments that have been happening. And that's it from me now. So if you like my content, please do subscribe to the channel, and I shall see you soon with another update. Take care. Bye bye. Have a nice day.